Hi there, and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. It's a rocky road across the ditch as Australians struggle to decide who will be in charge of their new hung parliament. How many of the bumps and jolts of our giant neighbour's journey will we feel over here? When it comes to saving the red meat sector in New Zealand, what guarantees do we have that all the latest hard-earned taxpayer dollars now being poured in will actually kickstart a dying sector? Are we simply pouring more good money after bad? And what's up with the price of your fertilizer following that hostile takeover bid for the world's biggest potash company in Canada? All this and much, much more coming up. But first, let's look at what's been happening in the markets around the world and here at home. The Reserve Bank of New Zealand has just posted its survey of expectations. Let's go to ASB economist Chris Tennent-Brown for his reaction. Chris, great to have you here.
Good to see you.
Tell me about the survey of expectations. What are the key indicators that it's warning us about?
Well, the thing within this survey is monitoring what inflation expectations are doing. When people talk about the Reserve Bank, they think of them as the central bank that raises and lowers interest rates, but their primary concern is maintaining price stability. So what people are thinking inflation's going to do in the years ahead is very important for that process. What we're interested in this latest survey is to see what's happening with near-term inflation expectations, because we've got all these costs coming in, particularly the GST increase.
Correct.
And likewise, we're thinking what's happening with their longer-term inflation expectations, so two-year inflation expectations. With all this concern about New Zealand slowing down some more, you'd expect inflation expectations to moderate. And that's what the survey showed us. One-year inflation expectations are quite high, coming in just under 4%, but two-year inflation expectations have pulled back a little bit, but they're still very high at 2.6%. So they're right up towards the top end of the range that the Reserve Bank wants to keep inflation within, which is that 1 to 3% range.
So no surprises at all?
Not really, and what we're really interested in is to see how wage setting goes in a year's time when people are dealing with these big inflation numbers. Is it realistic to people to think, I got a tax cut last year so I don't need to get a big wage increase? Or when they see hefty price increases because of all of these government charges, will they want far greater wage increases? So we'll just have to wait and see.
What kind of wage increases would you be picking for the general population?
Well, right now wage inflation is very subdued, which is what you'd expect when the labour market's still pretty soft. But as it starts to tighten up, I'd start to think people's wage claims will tick up. One of the things which feeds into that is the fact that we've got the Australian economy right across the ditch. It's a cheap airfare away, and their labour markets is really humming. So I think the strength over there will start to influence people's wage-setting behaviour, because a lot of people are quite mobile, and when they hear about the decent wages they can get over there, now that the Aussie economy's really on the recovery track, that'll be feeding into their thoughts as well. So I wouldn't be surprised if in a year's time we start to see wage growth starting to creep back up again.
It's about time. Now let's talk about the US, of course. First of all, how's the New Zealand dollar holding up against the greenback? Well,
we're still holding above that 70-cent mark, which there seems to be a lot of support there. But we have weakened somewhat. This morning we got the news that Ireland had their credit rating downgraded by Standard & Poor's. That caused the New Zealand dollar to weaken a bit. And last night we had some pretty lousy US housing data. So most currencies were in that sort of nervous risk-off environment and weakening somewhat. And to the flip side of it, the Japanese yen's very strong at the moment, so we've slipped on that cross.
Some really shocking data out of the US that I think even their own pundits are not happy about it. The jobless figures are incredible now. What's going to happen there?
Well, yeah, the jobless claims, the weekly jobless claims have ticked back up. They got down to around 450,000 per week, but they've got up towards 500,000 now. It's too early to say that jobless claims are starting to accelerate there, and they're still miles better than in the US downturn. But they certainly look like they're worse than most of the analysts in the States were expecting. So it's been a disappointing run for labour market data in the States.
And the fact is 4.5 million Americans now have to use food stamps in effect to feed themselves. It doesn't seem to be improving. coupled with that, of course, manufacturing activity, another key sector for growth in the U.S. economy, is way down. Talk to me about that.
Well, there's regular surveys showing manufacturing in the various districts around the states, and they're still pointing towards expansion in the 6 months ahead, but the indicators aren't as strong as what they were a few months ago. So it's just more data that's pointing to a deceleration in growth in the states. I don't think it's suggesting that they're going into another recession yet, but the growth signals certainly aren't as strong out of the states as they were. And one of the areas I'm really concerned about is the US housing market. There was pretty decent policies were put in place to try and keep it alive. Tax credits for first home buyers. That package was extended out into the early parts of this year, but now it's ended, and there's a real weak patch for the housing market. It looks like activity was really getting held up by that tax package. We just had home sales data out last night, and it was the weakest level in 10 years. That was for existing home sales. We get new home sales out tonight, and we're expecting that to be pretty weak as well. So there's not a lot of stimulus coming out of that for the construction sector. So that's something I think we really need to watch in the States, because at the end of the day, it was actually problems in the US housing market that were right at the start of this global financial crisis, and the housing market still looks pretty sick in my mind in the States.
So we'll continue to take the pulse, all we can do.
That's all we can do.
Thanks, Chris. Coming up, we talk cliffhanger, that Aussie election and the fallout there and here, plus plenty more. But first, a question for you in our Farmers' Facts and Figures quiz. At $7.10 a kilogram of milk solids, how much will the Fonterra payout be worth to 10,500 New Zealand dairy farmers? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, at $7.10 a kilo of milk solids, how much will the Fonterra payout be worth to our 10,500 dairy farmers? The answer, $9.1 billion. Joining us now to talk all things money, Stuart Locke, chairperson of the Department of Finance for the University of Waikato's Management School. Let's start across the ditch with that knife-edge election result for Australia. What's your take on it, Stuart?
I think the market doesn't seem to be particularly rattled. The dollar's holding. Our cross rates managing around the 80 cents mark still, and people have said that this uncertainty is just going to cause problems. I think market participants like uncertainty, really. That's where the money's to be made.
Do they? Because I thought they didn't. And Chris, I was going to ask you about the markets. They're remarkably calm across the ditch. This could go on for several weeks, they say. Yeah,
there's a lot of chatter over the weekend about how much markets hate uncertainty, and the Aussie dollar was going to plummet and the share market was going to plummet. But it was pretty stable. Certainly when currency markets opened, we saw a bit of a dip in the Aussie dollar. But it recovered through the day, and in actual fact the share market did reasonably well. In particular the resource stocks, investors are taking a punt that the mining tax won't take place now, and so resource stocks actually lifted on the day. So
they're actually loving it in Europe as well. They can't wait for that mining tax to go. The surprising thing is that Julia Gillard has apparently said she will not negotiate the tax. That to me seems foolish, doesn't it?
Well, it's sort of putting your head in the box, isn't it, on the guillotine? It's asking for trouble when you've got these rural people. They're the ones going to make it. She's got the EFT, the trading scheme, the emission tradings things. If she needs the Greens, they need the Greens in the Senate if they're going to get legislation through. I would have thought it's not the time to be taking too hard a fast position. Leadership, yes, is important, but on the other hand, I think. If you want the job, you're going to have to listen to these other players.
Absolutely. It really is a victory for rural clout across the ditch after how many years? I mean, what kind of fallout is it going to have for our economy here?
Well, from an economist's perspective, I just look at the framework that they're all proposing, and there's no major changes there. all the major parties and people concerned want to rebalance the Aussie budget, and there's no proposed changes to the way that the Reserve Bank of Australia runs monetary policy. And so I look at the bigger picture and think, well, is Australia going to continue trading with China? Yes, it is. Are they going to, commodity prices for Australia are still going to hold up well? Well, hopefully they will, and I think their economy will keep going well. And as our biggest trading partner, that should be good news for us. So there's nothing wild or wacky coming out of any of the politicians that make me think that Australian growth is going to get derailed. And so I think on the details we just have to wait and see. And the cynic in me thinks that politicians will do anything to stay in power. So I just wait to see the official announcements rather than get too caught up in speculating whether the mining tax, for example, is going to come and go and whether that's good or bad for New Zealand.
Stuart, a few boys from the back blocks now, of course, are going to be the kingmakers in Australia. But they're very lucky in a sense, aren't they? Because growth in Australia has been rocketing ahead for the past 20 years. They're in a pretty good position, aren't they?
Oh, very strong, as Chris said. The resources side, I mean, the flood damage in Pakistan, the floods in China, the demand that's going to be there for infrastructure products, like the iron and so on, the coal and so on, is going to be strong. So that side's going to continue into China as it tries to redevelop and deal with the damage. And the fires in Russia with the wheat. I mean, Australia is number 3 as a wheat exporter in the world. You've got to think, well, that's going to be strong for the Australian economy come the wheat harvests as well. So, it's all looking good, I would have thought, for the rural sector.
Speaking of the rural sector, one of the big issues, of course, the big talking point is the broadband issue. What's going to happen over there?
I guess it's like the broadband initiative here with the ultra-high speed and the rural broadband initiatives. I think that you actually need to put infrastructure in place. I'm a little bit supply side driven there. I think if we wait for demand and say, well, how are we going to use it? What are going to be the benefits? We'll never do it. And as a small country like New Zealand, I know that wasn't your question, but
that's all right.
Here in New Zealand, I think we've really got to take some plunges, get on with this sort of investing if we're going to get the productivity gains to really ratchet our national income up and our income per person. You just can't sell agricultural produce. You can't just have tourists come in. There's no productivity gains in that. We've got to do better, and we've got to invest in that future. So I do hope whatever the Aussies do, that we hang on to our broadband initiatives.
Okay, let's go to another part of the world, Canada, which I'm very partial to, home of the biggest potash company in the world. There's been a hostile takeover bid. Update us, Stuart.
Yeah, BHP Billiton's made a bid for Potash Canada, and Potash Canada is about 20% of the world market